Hello, welcome to Biz Up Buffalo, Pastone Enterprise Center Small Business Support Programs Survival Kit Series. My name is David Kraus. I'm with NuLevel Strategies. And tonight we're going to be talking about developing financial projections in a crisis, part one. We're going to learn how to think in terms of scenarios because we don't know how the future is going to unfold. So we want to allow different paths of possibilities. And in so doing, we'll be thinking outside the box, and you're going to surprise yourself as we ask some challenging questions to try to guide our thinking and build out our forecasts. And those forecasts are going to be sales and expense estimates over 3, 6, and 12 months over those different scenarios. Now, some things to keep in mind. This whole crisis can be a bit overwhelming, but you're not alone here. There's a lot of support available, and with every challenge comes an opportunity. So we want to identify that opportunity and focus on what you can affect. You'll feel much better if you focus on the things that you can change. In so doing, you'll need to adapt. And what do I mean by that? Well, keep your eyes and ears open and try to stay flexible. Know where help is available. Pay attention to the local officials regarding protocols. And lastly, we want to develop sales projections that are realistic so that we can chart a path forward that is realistic. And consider financing. Maybe a loan is your option to help you get through this crisis. We want to scrutinize our expenses. The goal is to preserve cash. So we want to postpone or delay certain things or cancel them altogether to see your way through this tough time. Let's try to keep in mind to focus on the most important things, whether they're revenues or expenses. In the 80-20 rule, as it might apply to a business owner, there might be a couple of sales relationships that are most important. That those are the ones that bring in 80% of your sales revenue. So we want to focus on those relationships. Make sure the relationships are healthy and moving forward. Similarly, you look at the expenses that are the biggest ticket expenses. What are the ones that make up the majority of your regular cash disbursements? So why would you want to build scenarios? Well, one projection based on one set of assumptions, particularly in a time like this, it's probably not going to be enough. So we want to model different paths forward. Gives you a much better sense of control. And as conditions change over the next few months, you're going to be better prepared. And lenders really want to see that. They want to know that you have thought through the possibilities as best you can, and you're prepared for different outcomes. And the result will be cash flow, like I've said, presented over those different time frames. Now, I attended an AICPA seminar last week, and they were recommending for very large companies to look at multiple scenarios, and they use this kind of language: quick recovery, moderate recovery, long recovery. This is what some of these things might look like, these different recoveries. It's basically in terms of how quickly business is going to get back to where we hope it's, where it was before, and where your business can get back to where it was before. So for simplicity, I think we're going to be combining the quick recovery, the moderate recovery, and the long recovery into two different scenarios. So a quicker recovery and a longer recovery. But it's one very important point that I want to make is that these different recoveries, they're not going to be consistent from industry to industry or from business to business. They are going to be somewhat unique to your industry's characteristics and your business's situation. So in building out your scenarios, you first want to examine your revenues. First off is sales. There's a reason they call sales your top line. If you can't sell your products or services, it doesn't matter how much you cut expenses. So we got to look at sales estimates. Ultimately, you're going to need to make your customers comfortable to patronize your business, and that can be done. You just got to be creative in some aspects. Maybe do things slightly differently. You're going to be trying to adapt to what some people are calling the new normal. None of us knows what that means, but Maybe you're going to have new products and services, delivery of services and products in different ways. You might have to rearrange a physical retail space to accommodate some protocols. If you're not selling online, you might have to ask yourself why. Maybe your service or product doesn't lend itself to online sales, but certainly an online storefront, maybe with curbside delivery, might be beneficial. You're having availability and cost challenges, hand-on product, raw materials, that type of thing. So maybe you want to think about sourcing from different suppliers to overcome those challenges. But remember, with every challenge, there come opportunities. So as we work through these scenarios, we hope that you'll be able to think about these opportunities and they'll kind of unfold before your eyes. And the other half of your forecast would be your expenses. So your cost of goods sold, can you get less expensive products to help manage your working capital? And what I mean by that is the cash that you have on hand to run your business. Labor and rent are going to be your two biggest, probably your two biggest expenses, whether it be rent or a mortgage payment on a property. So can you implement shorter work weeks if your sales are going to take some time to recover? Reduce salaries, perhaps take less of an owner's salary. There are PPP loans and community grants that might help you manage your cash flow and keep people employed at the same time. Because if you've got a valued workforce, laying them off, there's going to be a cost for you to replace them when the time comes for you to replace them. There are payroll tax credits that you might want to explore due to all the recent legislation that's been passed. Might be time to review your insurance policies for business interruption. Rent and mortgage payments, we talked about that, but there might be some relief from a lender or a landlord that is available to you. So have you explored that option? Lastly, you want to identify the lowest priority cash expenses, the things that you can actually push off or cancel altogether. That would be things like conferences or travel or equipment upgrades. If you can delay, you delay. Because the goal here is to hoard cash. And that final note is, if you have existing business loans, is there any possibility for refinancing those loans? Interest rates are historically low and they're not probably going to be going anywhere for some time. So for our next session, we're going to model both short and longer term cash flow projections over a couple of scenarios. And this will give you a framework to develop your own plan. If you have any additional questions, prepare them for the Q&A session this Friday. If you want to like, share, or comment on this video, we invite you to do that. Stay connected at bizupbuffalo.org. Thank you very much, and we'll talk to you soon.